In this video, we'll be taking a look at 6 different chart analyses to get you prepared for the week ahead. If you love the content, please like, subscribe, and leave your thoughts in the comment section down below. If you're interested in learning to trade Forex like a professional, you could take advantage of our sale going on right now. And this sale is going to be ending in less than 24 hours. So you get up to 50% off in our complete Forex trading course. I have the link attached in the description below. Without further ado, let's get started. So this is the gold chart on the daily time frame, and what do we see on this chart? We can see price, rallying to our all-time high at this price level, followed by a massive bearish rejection. Now it seems to have created a lower low. So we have these lows here, where we have this massive consolidation going on for about 2 months now, because this low is lower than this low. So I think there's a good chance we might be heading lower on gold before making another run at the all-time high. Okay, so if you take a look at this trend line, so drawing the trend line from this low across this other lows here, you can see we are already trading below this trend line, right? So that's another signal that we are currently seeing some sort of bearish pressure across the price action being displayed on gold. So we're going to go to the lower time frame to show you more reasons why I think we are going to get a bearish breakout to the downside. But meanwhile, just while we wait for our bearish confirmation, you can take a look at this range here. So this consolidation here, this is daily time frame, remember? You can see we haven't had a candle close below this support level, which means there's a ton of demand on gold right now, preventing price from closing below this level on the daily time frame. And I think if we're able to get a candle close below the support level, then we're going to head lower, right? So meanwhile, this is a bullish trend, right? We have higher lows, so 1, 2, 3, 4. So the overall trend right now is bullish. But if you are considering the price action from the all-time high, it's bearish. Okay, well, I think there's a good chance this bullish trend might be coming to an end, because we might not get significant bullish momentum to take gold above the all-time high. So there's a good chance we go lower first, consolidate a little, then head higher again, as the case may be. So I'm going to go down to the lower time frame right now to show what we're watching out for. So on the 2 hours time frame, just give me a minute. Yeah, so on the chart here, this is a 2 hours time frame on gold. So I'm going to show you another reason why I think there's some sort of bearish pressure on gold. If you take a look at the price action here, you can see we have a resistance level and we have price making lower highs. So we have 1, 2, 3, 4. So 4 lower highs, with this support level trying as much as possible to hold the price and prevent the price from falling lower. So this is what I'll be watching out for to go long on gold, right? So we're going to take a look at the bullish case scenario, then we're going to take a look at the bearish case scenario. So right now, well, first of all, we're going to wait for price to break above this trend line, get into this other resistance level, consolidate a little, and then give us that bullish breakout. So this bullish breakout would be my scenario to go long on gold. I wouldn't be going long even if we break this trend line here. This trend line is only serving as a guideline to interpret what the price is currently doing on the chart. So I'm going to wait for a consolidation around this resistance level, followed by a bullish breakout for me to go long. So that's my bullish case scenario for gold. And for my bearish case scenario, I'm going to wait for price to come into this level. So this is the first bearish case scenario. So if we get a reversal pattern here, a reversal candlestick pattern like a bearish engulfing candle, or a doji, or a very good inverted hammer, then I'm going to go short at this resistance level, aiming for this lows here, right? So that's the first case scenario to go short. Second case scenario is going to be waiting for price to close below this support level, right? This area of value. So this area of value here is what I'm waiting for price to close, excuse me. So when we close below this area of value, I'm going to watch the daily time frame, remember, to see if we get a candle close below, followed by a consolidation on the lower time frame and a bearish breakout. So this would be my scenario to go short if we indeed come into this area of value before we get into this resistance level, right? So my bullish case scenario will be waiting for us to break above this resistance level to go long, while my bearish case scenario number 1 will be waiting for price to come into this level, giving us a good sign of a bearish reversal to go short. That's 1 for the bearish case scenario. And the second bearish case scenario is waiting for price to break below this area of value we have over here, closing a candle on the daily time frame below this level and giving us this consolidation on the lower time frame, like in 1 hour time frame, to go short. Right now this is 2 hours time frame, but I will be going short or taking my positions on the 1 hour time frame. So that's it briefly for gold. I wouldn't be rushing to the market this week because there is a good chance we see some bullish momentum. There's a good chance we see some bearish momentum. So the best way to play this is waiting for confirmations before either going long or going short. So moving on, we're going to talk about Nasdaq real quick. So Nasdaq, I've seen some really interesting bullish momentum over the last few weeks, right? So we had a triple bottom here, so 1, 2, 3. So triple bottom, sign of a bullish reversal, and we had a massive bullish run all the way to this area of value. So right now we are currently sitting at a resistance level, and I think there's a good chance we, excuse me, I'm going to show you something. There's a good chance we reverse from this area of value all the way back to these price levels, right? Consolidating and then maybe going lower. This is just my opinion on the markets, okay, because the economy in the United States doesn't really look so good right now, despite the bullish indicators we're getting from fundamentals, right? So this is what I'll be watching out for on Nasdaq. So this is the 1 day time frame. I'm going to go down to the lower time frame to see what we're going to watch out for in order to go short. Okay, so remember we're currently at a resistance level, a significant area of value. So I'm going to go down to, let's say, the 2 hours time frame to see what's happening down there in order for us to spot out good trade opportunities for the week ahead. So give me a minute. Yeah, so here we go. Excuse me. Okay, so here we go. So you can see we had a very good rejection from this area of value. So on the 2 hours time frame, you can see we have some sort of a bearish engulfing candle, though this left a wick to the upside. So this means we had a ton of bearish pressure coming from the top to the bottom, right? Selling price. Well, I'm going to go down to the 1 hour time frame, so maybe this candle is clearly visible. So just give me a minute. Yeah, so here we go. So you can see we tapped into our area of resistance and we had a very significant bearish engulfing candle. So this would have been your scenario to go short. So around this price levels here, after the close of the bearish engulfing candle, would have been your scenario to go long, while your stop loss would just be above this candle. So if we close above this candle, then this bearish engulfing candle would have been invalidated. But for those who are not yet in, this is what I'll be watching out for to go short. So I'm going to wait for a consolidation like this, right? A consolidation followed by a bearish breakout to go short. So this would be my scenario to go short on Nasdaq following the rejection at this resistance level. So anything other than this, I'm not just going to jump into the market like this, right? So I'm not just going to jump to the market hoping we go lower. So the reason why I'm waiting for a consolidation is because our stop loss would have to be above the consolidation that leads to the breakout, while our entry is going to be around the price breakout. So this gives us a tighter risk to reward ratio, while our take profits is going to be around this area of value here, right? So this is how I'm going to trade Nasdaq if you are not yet in. So I was already in on this trade on Friday when I found out we got rejected at this resistance level. So if you're not yet in, you wait for a consolidation, a bearish breakout, and then you go in for those who are willing to take this trade. So mind you, we might be wrong, so I might not be right. This is just my opinion on the market to show you what I'm watching out for to go short or long, right? So if you are trading this, do it at your own risk. So there's no financial advice. So meanwhile, for a bullish case scenario, because obviously we are seeing a bullish trend, but on a higher time frame, we just got a rejection at a significant area of value, which is very important. So right now, to go long, I'm going to wait for price to, excuse me, let me get rid of this first. So to go long, I'm going to wait for price to slowly creep to the upside, consolidate a little, right, and then get a bullish breakout. So at the bullish breakout from this resistance level, that will be my scenario to go long, right? My stop loss is just going to be below the consolidation that leads to the breakout, while I'm going to trail my position as we go closer to the all-time highs. So that's it briefly for Nasdaq. This is how I trade: strictly price action, following the trend, following market structure, and let my risk management and my edge play out. So that's how I trade. If you're interested in learning to carry out price action analysis like this, check out our Forex trading course. It's going to teach you a lot. You can check out our reviews on Udemy. We've got tons of lovely 5-star reviews. Okay, people love this course, and I think you're going to love it if you're interested in learning to trade like a professional. Moving on, we're going to take a look at crude oil real quick. Crude oil on the if we zoom out, whether you go to the higher time frame or you stick on this lower time frame, but zooming out to see the entire picture of the chart. Okay, let's see what's going on the 4 hours time frame. Hopefully, okay, yeah. So on the 4 hours time frame, this is a bearish trend lower highs, lower lows. Right now, we seem to be stuck within a range. Okay, so now I'm going to go back to the 2 hours time frame to see what I'm talking about. So we seem to be stuck within a range. So there's a good chance we come into the resistance level where we look for opportunities to go short, right? So what we do within ranges is that we play the range. So we sell at resistance and we buy at support. I dropped the setup on this and I went long around this price level. I made some good profit, right? So this is what I'm watching out for on crude oil. So I'm going to wait for price to slowly creep to the upside, come into this area of resistance where I'm going to look for opportunities to go short. So opportunity to go short could be going aggressively if we get a massive price movement into the resistance level. It could be waiting for a reversal candlestick like a bearish engulfing candle, or waiting for inverted hammers or dojis. Just any candlestick signifying that we're going lower is what I'll be watching out for to go short. So that will give us a tight stop loss or a very good risk to reward ratio, because our stop loss is also going to be above the resistance level, where take profit is going to be anywhere between the middle of the channel to the support level of the channel. So this is how I'm going to trade crude oil. I wouldn't be going long on crude oil because this is a massive bearish trend, right? So there's a good chance, even if we shoot upwards a little, so let's say we go above the resistance level, it might eventually turn to a fake out, selling price lower, because this would be driving traders to trade against the trend, just because you see some candle close above the resistance level. So that's something to watch out for, because I know crude oil tends to do this a lot. So I wouldn't be going long on crude oil. If we don't get a reversal after we come into this resistance level, I'm just going to stay away. And if I go aggressive at this resistance level and we get price stopping me out, maybe due to a fake out, I'm just going to wait for price to reverse back, below this resistance level for me to look for a trade positions to go short. So that's how I'm going to trade crude oil this week. Other than that, I'm not going to do anything. So it's about patience, about risk management, and about getting the best trade entries possible. So moving on, we're going to talk about US30. I get a ton of requests concerning US30, so I'm just going to take a brief look at this so we move forward, right? So US30, excuse me, I'm going to get rid of this here. So US30, if you take a look at this chart, we are obviously in a bearish trend. You can see price making lower highs, lower lows, and then we had this massive resistance level with multiple price rejections. You can see 1, 2, 3, 4, just multiple price rejections, another one here, and now we seem to have entered the deep value level. So this range here is known as our deep value level, because this is where we have the multiple price rejections leading to bearish price movements. Okay, so this is a 4 hours chart, and I'm going to go down to the 2 hours chart to see what we can how we can spot opportunities to go short. Meanwhile, the goal here is to look for opportunities to go short, right? I wouldn't be going long on US30 right now. I'm only going to look forward to go short. This is similar to what we have on Nasdaq being stuck at the resistance level. So this is a significant area of value for US30, okay? And the trend is obviously bearish because we are making lower highs. So I don't see any reason why you want to go long. I'm only going to be going short. So even if we break above this resistance level, I won't be going long until I see clear confirmations that we are going to head higher. So for now, I'm bearish and I'm going to look for opportunities to go short. So going out to the lower time frame, so I'm going to get rid of this. Let's say the 1 hour time frame, for example. Let's see if we can spot out good trade opportunities for the week ahead. So here we go. So on the 1 hour time frame, you can see we had a good rejection off of this resistance level. And if you're going to go aggressive when the market opens, you could go short, right? So you could go short at current price levels. I don't advise that though, but I'm going to show you something. You can go short here and your stop loss is going to be around these highs. So your stop is going to be above the highs of this price rejection, since we are currently within the range of our resistance level, right? So if you need a better risk to reward ratio, you could wait for a consolidation. Okay, so you could wait for a consolidation like this, and then a bearish breakout as a signal that we're indeed going to go lower. The reason is because if you take a look at this price level, we are currently sitting at a an area of value. Why? Because price that uses level as a resistance level before, now it meant to be acting as a support level. So that's why there's a good chance we get some sort of reversal to the upside a little. So it will be wiser to wait for a consolidation at this price level, followed by a bearish breakout, taking out these highs, right, to the downside, which would give you a trade entry at this price level with your stop loss around the consolidation that leads to the breakout. And then you can trail your position as the price evolves. So first TP, second TP, and all the way to these price levels. So this is how I'm going to trade US30. So to be more conservative, I'm going to wait for a consolidation like this, because I think when market opens, we might see some sort of a reversal to the upside. So a consolidation like this, if we get a bearish breakout on this consolidation, then I'm going to go short with my stop loss above that consolidation, and my target is going to be as I've outlined on the chart like this. So this I'm going to trade US30. Alternatively, I know some traders would like to draw trend lines like this and all that, but if you're going to follow this trend line and wait for price to break this trend line, then you might end up getting a bad entry. But since we have an area of value here, if we do get a consolidation on this area of value, validating that this is indeed an area of value, if we get a bearish breakout, then that would be your signal to go short. Because if we take out these highs here, the next logical area of value would be these lows. So I don't see the relevance of waiting for price to take out this trend line, right? So that's how I'm going to trade US30. I wouldn't be going long, right? Because we are currently trading at a significant area of value as a resistance level. So moving on, we're going to talk about USD-JPY. So this is something I've been talking about for quite some time. Strong bullish trend on the 4 hours time frame. So just give me a minute. I'm going to go to the 1-day charts. So this is the USD-JPY chart on the daily time frame. You can see massive bullish trend. And if we go down to the 4 hours time frame, going back to the 4 hours time frame, you can see we made an ascending triangle. We had a breakout to the upside, so a bullish breakout. We had a consolidation as a bullish continuation pattern, and now we seem to be moving aggressively to the upside. Okay, so I'm going to go down again to the lower time frame. So we are currently almost trading at a resistance level, so I'm going to mark this out on the chart. So this is an area of value. I will call this an area of value. So I'm going to go down to the lower time frame to see what we could possibly watch out for to go long. To go long. We wouldn't be going short in this type of market condition, because obviously this is a bullish rampage on USD-JPY. So this is what I'll be watching out for on USD-JPY. I'm going to wait for some sort of consolidation. So we might go into this resistance level or this area of value, get a reversal to the downside, a good consolidation, followed by a bullish breakout to go long. This is the only way I would be trading USD-JPY. So the pattern or the bullish continuation pattern might not be as huge as this. It might be on a 1 hour time frame, it might be on a 2 hours time frame. I wouldn't be going below the 1 hour time frame. So I'll be watching out for the 1 hour time frame or the 2 hours time frame for a bullish continuation pattern with a bullish breakout for me to go long on USD-JPY. Other than this, I'm not going to be going long, right? Because you can see the massive swings. So you can see massive price to the downside, to the upside, to the downside, upside. Even when we took out this resistance level, we had a massive reversal. So expect the same to happen, right? As we grind to the upside. So there's a good chance we get to this level and we move to the downside again, where we look for opportunities to go long. So if this happens, this will be a very good opportunity to go long in line with the bullish momentum. Alternatively, if we don't get that, you could watch out for something like this, so a consolidation like this, right? And then a bullish breakout, because this consolidation is going to create something like a resistance level for us to go long. So this is what I'll be watching out for on USD-JPY to go long. Other than this, I'm going to stay away from this chart because it's not logical for us to go long here at current price level, because your stop loss would logically have to be around these lows. So this doesn't make any sense. So if we're going to wait for a consolidation like this and a bullish breakout, then our stop loss could be below the consolidation that leads to the breakout. So it gives us a better risk to reward ratio when we take our trade. So lastly, we're going to talk about CAD-CHF. So this is a very interesting chart. Obviously, we're in a downtrend, right? We're in a solid downtrend, lower highs, lower lows. We are currently trading around a significant area of value. So here we had a bullish divergence, lower lows on price, higher lows on RSI, right? So we had a massive breakout, consolidation, move to the upside. So we're currently trading around the area of value. So the reason why this is important and this is interesting is because we could go to the upside. This could be a trend reversal. Okay, so meanwhile, I'm going to go down to the 2 hours time frame to show you how I'm going to take advantage of this price action on CAD-CHF. So this is the CAD-CHF chart. This is what I'll be watching out for to go short. So knowing that we are currently trading at the area of value in line with a bearish trend, so I wouldn't be going long at these highs here. So I'm going to simply wait for price to come to this downside, consolidate, maybe a small reversal, consolidate a little, and then a bearish breakout. So this bearish breakout could be my signal to go short in line with the bearish trend after being rejected at this area of value. Then my stop loss is going to be around these highs, and then my take profit, my take profit is going to be around these lows. So this is how I'm going to trade CAD-CHF if I'm going to go short. So I'm going to wait for price to take out this support level, this area of value, before I go short in line with the trend. So if I'm going to go long, I'm going to wait for price to slowly consolidate around this area of value, give us a bearish breakout. Then I'm going to wait for a retest, because this would mean we are going to be trading in the opposite direction of the trend. So to trade in the opposite direction of the trend, we need confirmation, right? So I'm going to wait for a retest. So excuse me, I'm going to adjust the chart. I'm going to wait for a retest followed by a reversal to the upside. So this will be my confirmation that this trend is indeed going to change before I go long on CAD-CHF. Other than this, I'm going to stick with the bearish trend. Wait for price to take out the support level before I go short. But if I'm going to go long, I'm going to wait for price to take out this, consolidate a little at this area of value, take the area of value out, retest as confirmation, then followed by a bullish reversal. Then I'm going to look forward to going long in line with the new trend, if indeed we take out this area of value. But meanwhile, the best case scenario is waiting for price to take out this support level or this area of value to go short in line with the trend. So that's it briefly for this week's analysis. I hope you learned a thing or two. If you're interested in learning trade forex like a professional, take advantage of our sales going on right now, which will be ending in less than 24 hours. I have the link attached in the description below. If you are not on Discord, join our free community on Discord. I also have the link in the description below. And check out our Instagram page. We've got tons and tons of free content every day. So that's it from me, guys. See you next week.